Okay, so we're looking at the S&P. Can you see my screen okay, Michael, there?
Again, yeah.
Yeah. So S&P, so we've had a small bit of a pullback. Yesterday, obviously, it gained a bit. So I suppose you can't really talk about yesterday unless you speak about the Magnificent Seven. So if you look at Google up 9% yesterday, you'd Apple up 3.8 because they benefited as well, or they're forecast to benefit from the judgment. You tested, so it's the Magnificent Seven up, broadly speaking, which usually equals the rest of the index going up as well. But personally myself, I still think with the S&P, I think we'll have a retest of this low. I'm not sure will it hold, and really I suppose I'm hoping for it to get down to 6,000 by the end of the month, with a view to buying into the index, and then really just holding on to it then until the December period is over, and then probably bailing out. So a couple of people asked me, what way could you do this, right? And there's a number of different ways. One is you can just invest in SPY. So if you're going to invest into your pension fund or something like that, an ETF is probably the easiest way to do it. Another way is you could buy a call option on SPY. So because you're not getting paid a big dividend or anything like that, you could buy a call option. The problem with the call options is that you're paying for time value. So if, for example, and I'm going to go through this in a second, if let's argue now that we were ready to buy now, and we thought it was going to go up, let's say 5% from here. So if we go out we look at SPY and we go all the way into the December expiry, right? The current price is 645, right? So if we bought, for example, the 645 strike, you're looking at it costing you $22, which is, quite a lot. It's 2,200 per contract. So we would need SPY then to get up to past 667 by December just to break even. And that's the problem with buying call options. Now, what you could do is, for example, let's say you thought SPY was going to go up 10% from here, which is 64 points. You'll still make money in that. But what I'm saying is this time value reduces your probability of actually making a profit. That's the downside of buying call options. You could do something like turning it into a bull call spread, where, for example, you might buy the 645 call and then sell the 665 call at the same time. So you're basically limiting your upside potential up to 665. You're taking in $11 in premium there, which will offset, 11 off this cost of 22 here. So all of a sudden you've halved your investment. And then if SPY did get to 665, you've invested $1,000, let's say, to make, a nice decent chunk of money there, which would be 1,400 quid. So you've doubled your money on it using call options. It's not my preferred route, to be quite honest with you. Buying time value, I'm not a fan of, unless something you feel is going to move quite a bit. So the other way of doing it would be just to buy the futures itself. So if you look at these futures contracts here, you actually buy the futures. So you're not investing a heavy amount of capital. You're literally putting like a margin down. And it's a cash settled future. So that means is that if, for example, you went out into the December contract, so we went out to the December contract, which is this one here, I think. So if we went into this one, for example, this is your December contract, you would buy something like this with the view to obviously selling out if it got higher. So there's a number of different ways that you can actually trade the S&P 500. All have pros and cons. My preferred route potentially would be the futures, to be honest with you. But I can understand if people would prefer SPY. I get that. That's another way of doing it. And my least favorite one is really buying the call options on SPY. I'm not a big fan of that, to be honest with you. But I just thought I'd explain the three routes. So we're not ready to do this yet. I just want to be clear on that. So I still expect the S&P to come back a bit from here. If you think about it, We had the Mag 7 up yesterday. Okay, the market was up 0.5%. I thought it would have been up a lot more, given the moves in the likes of Alphabet and Google and all that type of thing. So for me, I still wouldn't be prepared to go long unless we were at 6,000 or below. And at that point, I would be prepared to go long. So that's the kind of the S&P. If anybody, any questions on that? We're in a bit of a waiting game here. So just looking at our preferred strategy on this, the ratio put spread, we're probably looking now at actually using the September 26th expiry. And I'm still kind of at the 610, 600 strikes. I might move that to the 620, 610, because that ultimately gets me a break even below 600. And I'm okay with that as well. But I'm still not ready to place that yet. So you can see here, we'd be paying out $300 a contract to buy the 620 puts. And if we come down to the 610s here, we'd be selling 2 contracts of these for every 1 contract we bought at the 620s. We're generating about $100 in credit on that trade if we put it on now. Okay. I think we're going to get a better premium by just waiting. That's my best guess. There's no guarantees, of course. So I would prefer to wait to see that we get a better premium. The other combination I'm looking at as well is the 610 600s, which is less risky, and the premium you're taking in at the moment is about $80 a contract. So I would much rather do this one, the 610 600, and try and get a sign on that one, and then I'd be pretty much, I would sit tight then on SPY for the rest of the year. So you could do that as a trade, and then let's say, for argument's sake, if you got assigned and you wanted to switch over to the futures, you can just sell out of your stock position in SPY and switch over to the futures. So there's less margin required in it, and there's you're getting a similar type of upside. There's only one downside to the future, and that is because we're going out to the December future, there's a cost of carrying that, which basically means that we still need SPY to move, or the S&P to move up a bit to break even on that one as well by December, because as each day erodes till we get to the expiry in December, that cost of carry reduces, and we've already paid it. Let's say we bought it today. So they're the kind of couple of ways I'm looking at trading this. My go-to strategy will probably be the 610 600, and I'm not prepared really to put that trade on unless SPY gets down here to the 625 level. So, you know, really down below that 50-day moving average. The 50-day moving average at the minute is at about 630. I would rather see SPY at 625, and then I'd probably put that trade on. Okay. Before I move on, is there any questions on that?
If you were assigned on the SPY, like, wouldn't your percentage of your portfolio be very high?
It depends how many contracts you've done, Michael, but and the size of your account. So it's really relative. So, you know, if you have a 50K account and you've done 1 contract there, you've basically allocated the entire account to that. So then it depends, but you want to use up a bit of margin to do 2 or 3 contracts. So again, just to remind people there, you know, let me show you on this account. This is what's the portfolio value on this account? This is only a $30,000 account. Look what it would cost me if I was to pretend to buy SPY here, right, as a stock. So, you know, 100 shares. Let's say I was going to buy 100 shares of this. Now that's $64,000. There's not $64,000 in this account, but your broker still allows you to trade it. That's a thing called margin. And if you look down here, you can see what the margin estimate would be when you go into preview tab here. So you can see my margin is getting increased by 16 grand on that. So it's allowing me to buy 100 shares because my account is much smaller. My margin is a lot less, but if you had a much bigger account, you wouldn't be forking out that amount of margin. So for me, basically buying into, you know, 65 grand's worth of stock, I'm actually getting a margin facility here of 16. So I'm only having to put up a quarter really of the capital to really trade that position. And what happens here is, guys, you charged an interest on that. So that's the downside of it. You're paying an interest rate. So that really depends, Michael. That's
Yes.
why I kind of prefer the future, you know. Does that make sense to you?
Yes.
Yeah, okay. So look, that's kind of SPY in a nutshell. We just have to be patient, in my view, and hold off and wait on that. So because we were talking about Google or Alphabet, I'll just bring it up here. So I kind of put out a note yesterday saying, I know it's jumped quite a bit and it's had quite a run for us. Like since we've bought this, we're up 50%. We're pretty much 50% on the bottom. But if you look back at equity scan here, so let me just bring up Alphabet in here. And this is one thing I really like about equity scan. If you come back here, we're going to look at just the history of the analyst estimates, right? On this, it'll take a bit of time to load. But you can see it was only kind of nearly 3 weeks ago. The analyst estimates, we go back to August the 15th. Analyst target price was 219. If you go back to July, it was only at 200. So you can see that the analysts have been raising their target price on Google and Alphabet pretty much consistently for the last number of weeks. And now if we go back in time here and we look at the current analyst estimate is up at 231. So when this timestamp happens on Saturday, you know, you're going to see another jump in that. So what I think is actually going to happen is actually the target prices are going to continue to increase. So whilst what we're seeing here, potential upside of only 2.5%, I actually think that's probably going to go to 250 eventually, because if you look at the multiples, and this is a nice little screen here, look at the multiples we've applied here to Alphabet versus, let's say, the three other mega caps. So you can see Nvidia's at 35, Microsoft's at 27, Apple's at 27. So they're probably two of the closest ones. We've only applied a 23 multiple to Alphabet. So for example, if we change that to a 27 multiple, you're talking about our target price going over 250 straight away. And it's similar here on the price to sales ratio as well. We've a much lower price to sales ratio. So the point I'm making is that I actually see room here for earnings per share upgrades on this, plus valuation multiple upgrades too. And that's why I'm saying to people, I wouldn't be in a rush to sell this. And don't forget, we've got Waymo and other things, other projects that they've invested into that will probably add to the bottom line over the next number of years. So I will be reluctant to offload Alphabet even after yesterday's jump. Now, having said all of that, I want to pre-warn you that normally when you get a jump like this, you're really talking about a pullback at some stage, you know. So it wouldn't surprise me if this pulled all the way back to 210, even 200 before it goes higher again. So I'm pre-warning you on that, but that's not enough for me to sell it. So if you think about it for investors based in Ireland, if you've got Alphabet and you're selling it now just to lock in this profit, but you're going to buy it back at 210, you know, you're locking in a capital gain tax. You're going to have to pay tax on that. Is it really worth it? The hassle and everything, if there's something you really want to get back into and hold for the long term. So for me, the only thing I would do is if my position has got way over 5%, and maybe it's gone up to 8% now because of the jump in the stock price, maybe you trim 3% off your portfolio. But I would pretty much hold the rest of it. I hope that makes sense. I'm just saying that whilst our upside potential now is only showing 2%, I actually think that's going to change over the next number of weeks as we get more and more upgrades to earnings outlook, and also maybe a multiple expansion on the valuation front too. Okay, but that doesn't mean we're not going to get some sort of a pullback at some stage. So that's Alphabet. So now moving back onto TLT, our TLT position, which is something we have at the moment. So you can see here going nicely in pre-market there. It's up over 87 now in pre-market again. Now, what I've done on my private account, for what it's worth, I put in a limit order to get out at 88. So I'm going to trade this sideways. We've a lot of economic data out this week, and if it's, let's say, worse than expected, I think you're going to see interest rates fall and TLT jump up, you know. And then on the flip side, if it actually goes better than expected, you might see interest rates actually rise and then TLT fall. So what I'm saying to you here is, in my opinion, in the very, very short term, I think you're going to see something like this. Pretty much a trade in between, this low of 85 up to a high of 88. Okay. So we've a trade on at the minute. Our break even, I think, is about 86.10. So we're in a nice bit of profit. So if people wanted to bail today, take the profit off the table, that's fine. Your guess is as good as mine in the very short term as to what way interest rates are going to go. I've got an order in to get out at 88. I might revise that order. I might change it and bring it back a bit, depending if there's a big move in it, for example, today, and we're getting really close to 88 and I just want to lock in the profit and mark away, I'll do that. Another thing to note, about TLT is that I went ex-dividend the other day. So 33 cents Friday to Tuesday. It went ex-dividend. So anyone who held it from last week, you have a 33-cent dividend coming. So whilst this, for example, in the pre-market is at 87.12, right? You're really at 87.45 because you've got a 33-cent dividend coming into you. So I just want you to be aware of that. It's very important to understand that. Another dividend is coming your way, and the payout date is actually going to be Friday. It will actually land in your account on Friday. So I just wanted to cover all of that off. So maybe for that reason and the fact there was a dividend payout, I might adjust my target down to maybe 87.60 or something like that, because I've got my dividend, and it mightn't quite reach the 88 now. I hope that makes sense to people. So I think putting in an 87.60 limit price to get out of this TLT trade mightn't be a bad idea. I think it's going to stay sideways until we have a clear indication from the Fed that they're going to cut rates. Now, if this economic data is worse, really worse than expected, then that's different. You could see this rally up very quickly like it did before. You can see, kind of there was jumps in it all the way up here. But you'd want to see the economic data and weaken quite substantially, Any questions on TLT?
Can you do a covered call on TLT?
Yeah.
Yeah, I got assigned last night actually on it.
Oh, lovely. You can do
87.
You can do a cover call on it, Michael, right? Having said that, the downside of the cover call that I don't like on this, right? So let's say you were thinking 88. You have to go pretty much a couple of weeks to get a bit of premium, unless you stay at the money and you go maybe to next week and you go at the $87 strike. What were you getting in yesterday? You were only getting in like $30 a contract.
Yeah.
The point is, let's say this jumps up towards 87.50 today, right? I probably just want to get out of it and sell it. Like if you look at what the action has been on it, like if you start selling cover calls, let's say it's rallying up here, you sell a cover call, it comes back down. You've missed your opportunity to sell out,
Yeah.
So I'm treating this like a rolling stock at this moment in time.
Yeah.
And we make 1% every time. We're up over 1% again already. I think we're going to make a bit more. And that's why I'm saying I'll probably get out at 87.50, 87.60 in and around that area. Because we've got paid a 33-cent dividend there, just, which will be in our account on Friday.
Well, the dividend wouldn't apply to an assignment last night.
You got a sign? No.
No, that's what, yeah. So, yeah.
No. You'll get it next. If you started holding next month, you'll get it,
Yeah.
So that's TLT, guys. So another winner on TLT, which is great. Might be exiting that today. If I do, I will send out a text to the group. Okay. So that's TLT. Just then, kind of on the natural gas, it's kind of gone away from us again. It's jumped back up, but I wouldn't be jumping on it. So why has it gone up? Some of the storage reports that have come out since it kind of bottomed out here have shown that supplies have actually started to get lower, and that's why you're seeing an increase in it. So I wouldn't chase it here. I don't. It's one of those, as I said, I keep liking 250. Maybe again, me being too cautious, I got down as far as 260. I said 250 was my trigger to start buying. I'm going to stick with that and wait. So I wouldn't chase it. That's just my opinion on it, you know. Some of the other stocks then we've been looking at, Kingspan is kind of bottomed. It's gone ex-dividend today as well, if anyone who did buy it. So you have a dividend coming up soon. Yeah, we didn't buy it, but could you buy it now? Of course you could. I still think that it's in this little downtrend here. So because I think the market is going to come back, I'm not a fan of buying anything, to be quite honest with you. Veolia was another one there that's kind of jumped a little bit on us there today. We were saying that's a very bullish engulfing pattern here. So you've got your or your RSI deeply oversold, has crossed back above. You got a bullish engulfing candle followed by another higher open, and it looks like a higher close. That's a very bullish setup there. So it wouldn't surprise me to see this fill the gap. Still, kind of as I said though, I'm just at this moment in time, I've no interest in buying stocks. I'd rather just keep trading TLT and taking 1% a week out of that, because you can allocate a substantial part of your portfolio to that, you know. So that's kind of what I wanted to cover today. That just really the SPY and the TLT are the two main trades we're looking at right now. SPY, we got to be patient and wait. As we get closer to the time, I will spell out different ways you could trade it, and everybody will be different on that. My preference is to do the ratio put spreads on SPY. If I get assigned, then close out of them and open up pretty much the futures contract. That's what I'm going to do, and I'll walk you through that, but everybody will be different. And then the other one is the TLT trade, which has gone very well for us again. And really, I'm getting ready to bail on that. If this continues its momentum today and does get up to that 87, 50, 60-ish level, I'll probably bail on that. Okay?
It's a good return.
It is, and we've done it. I think this is the fourth time, is it? In the last 5 weeks, we've done it now, and we've generated over 1% each time. So it's a great strategy to apply for something that's boring as hell and goes sideways. I mean, at the end of the day, it's all about making money and gambling on individual stocks. Given what's going on in the world, they're gambles. We don't know what's coming next, you know, and what industries are getting targeted. And I much prefer to trade something like this or the index itself. That's just my preference. So I'm not really interested in buying into any stocks at this moment in time. I'd rather focus on trading on TLT and SPY. Any questions, or is there any stocks you want me to look at, or?
No, not me.
Okay, folks, I'm going to leave it there. Have a great day, and if you have any questions at all, just reach out at any stage. Okay.
All right.
Thank you.
Bye for now, guys. Bye bye. Bye bye.
Have a good weekend.
You too, Michael.
You too, Michael.